Okay, so talking about the Paycheck Protection Program and the ERTC accounting side of it, not the tax side, but the accounting side. We've seen, 2 rounds of PPP funding, and now we have an additional avenue with the ERTC, the Employee Retention Tax Credit accounting. So it's probably important to look at that from a onslaught of, what is the guidance for for-profits? And I'm sad to report that under US GAAP, there is no authoritative guidance. That's why Rachel talked about that ASU that came out rather late in the game, talking about disclosing and what accounting policy that you selected. So looking at that from the PPP side, since there is no guidance specifically for profits in the FASB codification, there was variability, right? So we've seen a lot of entities said, well, this has the nature or legal form as debt, so we're going to adopt, this policy to treat the PPP funding from the government as debt under FASB ASU 470. We had others, and you can see that in the market, and you can see that they didn't think it had the complete concept of debt, but it was more government assistance. Well, since there's no accounting surrounding that from a US GAAP standpoint, then you had to use an analogy of either the nonprofit accounting under US GAAP, section 958-605, that talks about revenue recognition from government assistance, or International Accounting Standards 20, accounting for government grants. And then sometimes very minimally, you would see the 450-30 guidance approach from a gain standpoint. So looking at it from option 1 as debt, the nature of it, if you elected that policy during that time period, you would record the liability, and the debt is not officially forgiven until you are technically legally released. Now, what we've seen is there was problems, obviously, getting that SBA notification letter saying that this should be forgiven. On the balance sheet, if you adopted that policy, there would be obviously separate balance sheet accounting. We found it favorable to break that out separately from your regular debt instrument, and then there should have been some accrued interest, though most likely immaterial. There obviously was instances where different entities received part forgiveness or whole forgiveness. So on the income statement side of things, if that was treated as debt, then you would record, the forgiveness of debt as a gain on extinguishment. The statement of cash flows, there's some differences there if you treat it as debt. Obviously, the financing activity, the cash inflow, the borrowings on the PPP money would show up under that section of the financing activities. And then the operating activity section, if you receive that forgiveness from the SBA, and then you would book and record and represent that gain on forgiveness on PPP as a non-cash add back up top under operating activities. Option 2, I would say this is probably the more preferred method that we've seen adopted during the round 1 and 2 from the accounting stand. And you can see here that even the SEC acknowledged that they would not object to accounting for the PPP loan 1 or 2 as 470, which is debt, or as government grant by analogy using International Accounting Standards IAS 20. They basically admitted they don't have the guidance out there yet, but you can analogize the international standards. And if the key there is if you have reasonable assurance that these conditions are met. The 2 conditions are that you met the objectives to qualify for the PPP, and you expect with probable recognition that the assistance will be received. So probable in US GAAP is basically codified as likely to occur, which is generally considered a 75% threshold of confidence. Under IFR, International Financial Reporting Standards, IFRS, they have a more than likely than not standard, which is greater than 50%. So if you're 75% confident that you're going to get this PPP funding, and you met the conditions, and then you're using this analogy of IAS 20, that would be your accounting policy, which is now required to be disclosed, and you would have booked that. And then on the side from the revenue, because the earnings impact from this government grant should be basically systematically allocated over the time period for when those expenses were captured. So a little bit clearer here on the cash flow side, you would record a cash inflow from the PPP loan. And then subsequent, you'd have the credit to the income statement, either separately or under a general heading. Typically we saw other income. And then the other option under IAS 20 is you can, instead of showing it as other income, you could put that credit as a reduction to the related expenses that it qualified for example, payroll, right? So obviously this accounting standard doesn't come without risk if things don't get forgiven fully. I see that most in the market, the people that we've talked to, we didn't have a lot of pushback from the SBA, but those are still subject to oversight. On the nonprofit side, well, you don't have the option. You basically had, you don't have the option of IAS 20 because there's actual FASB guidance for government grants under 958-605. But because the PPP specifically had that nature of debt, there was entities out there that said, well, let's book it as debt. Let's recognize it as debt because we want to be very conservative. So when you would do that, obviously your cash you debit the cash, credit the debt, and then relieve similar to IS 820 once that forgiveness letter is received. Most of our the clients out there that we've seen and people we've interacted with, we've seen the 958-605 approach, where it's a refundable advance. And from there, on the refundable advance side, you debit cash, you credit refundable advance, and then when the terms are met, then you release that liability into income over time based on when the conditions are met. And that really goes back to ASU 2018-08, where they have that decision tree on conditional grants and conditional receipts. So obviously its disclosure is required and it's accounting policy driven. And the PPP stance that you had, back when you initiated that, will follow through with this ERC money that at one point in time, you only had the option of PPP, but now we're seeing the ERCs becoming, obviously a good way to get a windfall. So like I mentioned, there was just PPP or ERTC, but the CARES Act, basically through the Consolidation and Appropriation Act 21, retroactively removed the limitation. So entities that applied for PPP, maybe round 1 and round 2, could now go back and say, we also need to apply for the ERC, the Employee Retention Credit. So that credit, as well as the PPP, is basically a little bit similar nature, right? Government grant assistance. So that's why it dovetails into the accounting, because what method you picked originally, you should be consistent, right? That's the accounting policy that you adopted. So looking at the accounting for ERCs under US GAAP, on the not-for-profit side, you would follow 958-605 because there's actual guidance surrounding that. ERCs, employee retention credits, when you do a 941X and you amend your 941s, you're getting basically a refund on the taxes you paid from as an employer. So there's no real debt nature to it. So there's nothing to talk about from a 470 FASB perspective on it. So on the for-profit side, we're in the same boat, right? So what did you pick last time when you used PPP 1 and PPP 2? Did you adopt IAS 20 as a, basically your analogy for recognition? Did you analogize 958-605? So the model under IAS 20, and I think that's probably where they're going to get to, because like I mentioned before, they do have an ASU about the disclosures, but they haven't had an official stance on this is what we want to do and this is how we want to record these from a for-profit perspective going forward. It's interesting to find that in FASB itself, under section 105.10.5.2, it does permit considering non-authoritative sources such as the international accounting when there's no accounting for the transaction or it's not specifically specified. And that's why the SEC came out and said, you know, we could see the PPP funding being debt or IS-20. So whatever way you want to pick, that's fine. Just keep that as an accounting policy. So that's the stance for that. On the recording side of things for the ERTC, you know, it's if you're going down the nonprofit side, it's basically a conditional grant. So you don't book that entry until you met the conditions, right? Looking back at that ASU 2018-08, that flow chart, it really tells you, did you meet those conditions and what are the barriers that have to be overcome? One of the questions we often get is, well, you know, I think I'm going to be qualifying for the ERTC. I looked into it, or maybe you didn't look into it, but you have an idea. The key is, are you probable? Did you meet the conditions, right, of the ERTC credit? And then filing that 941X, technically, if you look at 2018-08, that is an administrative function. It's not considered a barrier to revenue recognition, but there's some judgment there. You know, filing a report is not, you know, that's an administrative function. So obviously the key to this is figuring out, do you qualify? So 958-1075 talks about the conditional promises to give and the barriers. And the ERTC specifically on the tax side, you'll see what needs to happen to qualify. There's basically two tests, and I'll let the tax department go into most of that detail, but there's a gross receipts test and a suspension of service test. So if you qualify under the gross receipts test, then that barrier of revenue recognition is not met until the end of that quarter, as the test depends basically on the end of that quarter for revenue comparisons to see if you qualify. So the receivable and the related contribution income should be recorded at the end of each quarter and then decreasing into revenue. So that's how you would handle the ERTC from a gross receipt standpoint if you qualified under that method. On the suspension of service, the ERTC is earned as the wages are paid throughout the time period of suspended services. So you'd have to really look at when you're applying and what options of the test you're adopting for the accounting surrounding this. Now on the for-profit side, you know, the things to consider is any conditions attached to the assistance that will be met. Will the assistance be received? So just like I talked about at the beginning, because it's kind of a backbone, similar nature, if you're adopting that IS-20, are you 75% confident that you met those conditions and the assistance will be received, right? And then if that's the case, then you would recognize, you know, that credit over the period of cost for the grant that it's intended to represent. Quick little example here, running through some debits and credits. Like I said, under IS-20, you have basically two options. You can book it to other income. So, and in this example, say that you met it at the end of each quarter, 500,000. You would debit that grant receivable. We recommend, because of the nature of that receivable, break it out separately on the financial statement balance sheet, and then you book the other income on the statement of operations. Under that standard, though, you do have the option of booking at credit against payroll expenses or whatever the qualifying expenses were. So that's some leeway that standard has. Then obviously once cash comes in, debit cash and credit off that receivable to release that. Here's some disclosures that we pulled together. These are from the AICPA template that we have subscriptions to. So these are great examples to use and have been used in the trends reports. So you'll see, you know, this talks about the CARES Act, you know, the varying interpretations. It's still subject to retroactive audit review. It'd be interesting to see if the feds ever come back and audit these things, since they already determined that PPP funding is not single audit money. And then here it talks about management has determined they have overcome the barriers of the government grant credit and where they booked that information. Here's another example that talks about, you know, the amount that was received, the receivable still outstanding. I know, I think I've heard rumors of millions of 941Xs that have yet to be opened and honored from the IRS. So there's a good likelihood that if you did apply for ERC and you got it, fantastic. If you didn't get it yet, it's probably coming, but it's probably sitting on your books as a receivable, right? And then this talks about, you know, the quarters that you applied that 941X to. Here's another example that talks about booking the ERC and reducing the operating expenses, right? So like I said, there's that option. If you don't want to do other income and you want to offset the expenses, you can, you just have to disclose that. So that's a great option of example disclosure for that. And then this one is just a little bit more detailed, but want to give you real life examples of some of these disclosures. Those that write their own reports, it's good to see some templates out there that have been vetted through and meet that ASU that Rachel just talked about on the front end.